possible with Reg A Plus to conduct an offering for 3 years without stopping. I'm not saying you should do that. I'm not saying you want to do that, but the ability to do so is very valuable. And one of the things that we bring to the table is, because we are specialists in Reg A Plus, there's a lot of nuances to it. And one of them is how to write your Reg A Plus to facilitate that. Because the normal mode of operation is at the end of your first year, you are allowed to do another Reg A Plus, but you have to file again for that. It's easier, it's less expensive, it's quicker because you've already done one, but you have to stop and file, and then when requalified, go live. Whereas if you write the Form 1A properly in the first place, then you can stay live continuously for a maximum of 3 years, which has a lot of positive characteristics attached to it, obviously. Another one that's interesting is that there are some significant advantages to using a limited partnership. Obviously, most raises are for C corporations, fewer LLCs, and far fewer limited partnerships. But it's possible to use limited partnerships and incorporate proper liability protection. And the advantage is that the direct provision of liquidity to the company's investors, or the entity's investors, is far less restricted in Reg A Plus when you use a limited partnership entity. That's something which can be lovely, to provide direct liquidity to your investors in a predictable and managed, appropriate, balanced manner. We're going to see, in one of the side effects of the stock market being volatile, I think it's probably overvalued temporarily right now, and we're going to probably see some more downswing before things settle out. But be that as it may, the point is that while the market is in a nerve-wracking, volatile state, then getting underwriters to take companies public becomes heinously difficult. It's like a switch gets thrown. Very few companies are good enough to make it through the filter. In that case, direct offerings become more attractive. So I think over time, we will anyway see an increased trend to direct offerings using Reg A Plus and not using Reg A Plus. It's a very viable methodology, and you don't have to use underwriters. So if you have a company that is substantially strong, that has a large enough investor base and profit and revenue predictability, and a management team that's up for the challenge of being a listed company, then a direct listing can be a good way to go. And I expect that we'll be facilitating and assisting clients to do those direct listings over time. Just a matter of time before that comes to pass. Secondary offerings can make more sense through an online raise in this climate than going through underwriters, for the same reason. If they've shut their doors to you and you really want to raise money, then an online offering may be a better way to go. And I think I touched on this earlier, but because of the increased awareness of and the increased credibility of online fundraising, we see active institutional engagement with many of our client companies that we never used to see. Sizable investment amounts, and of course they need better terms. They're not going to invest on the same exact terms in a Reg A Plus that somebody can get with a minimum $250 or $300 investment. But that isn't hard to handle. And of course, you can do it through a parallel Reg D, but there's some synergy in doing it via the Reg A Plus, and building that into the offering in the first place is a smart way to go. I mentioned using tester waters. We'll see an increased trend to using tester waters carefully. In the early days of Reg A Plus, tester waters tended to be used by accident, where companies didn't expect it would take as long to get qualified or to get ready or to get their audit done. So they were in reservation mode for ages and spent too much money advertising, and they lost the interest of their reservation holders. When it's done properly, it can work really well. We helped a company, a client called In Situ Biologics, who did their biotech company, did their Reg A Plus with us. They converted, I think they had $1.8 million of reservations when they became qualified, and they converted 73% of the dollar value into investments in 10 days after qualification. Probably one of the best conversion rates that we've seen in Reg A Plus. Of course, everyone doesn't give me their numbers, but we're having a similar success with another client right now.